Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, February 9th, 2024. The secrets and lies the DC elite tell us about the income payroll tax system. There are many reasons that the DC elite fight so desperately to keep the corrupt and broken federal income payroll tax system in place. Some of these are that it's a great source of campaign contributions, threaten a special interest tax break, and the money flows into the politicians trying to save it. Providing tax breaks to some and tax penalties to others is a great way to reward friends and punish enemies. It's also a great tool for exerting control over people's behavior and decisions. Reward those who do what you want them to do, and punish those who don't. It empowers the smart people in D.C. to control how much of our earnings we get to keep, and the income payroll tax system provides work for countless bureaucrats and private workers in the income payroll tax area, and it keeps those workers dependent on the D.C. elite for their jobs. Most importantly, though, the income payroll tax system conceals just how much the federal government is really costing us. Now, your first reaction may be, but wait a minute, I do see how much I'm paying. My federal tax withholding and payroll taxes are right there on my paycheck stub. Well, that's true, but those are just the taxes you see. You pay hidden federal taxes every time you buy something. So whether you're retired or employed, these hidden taxes embedded in the prices of everything you buy boost your tax liability well above just what you see on your pay stub or your tax return. Now, the basic laws of economics dictate that all private businesses must make a profit in order to remain in business. That means that a business must sell its products or services for more money than it costs the business to provide those products or services. For example, take a family wheat farm. Now, in order to have wheat to sell, the farmer must buy or lease land, buy seed, buy a tractor, a combine, and other farm equipment, must pay all the cost of operating and maintaining that equipment, hire employees and pay their salaries, benefits, and the employer's share of the federal payroll taxes, 7.65%, and of course, the farmer must pay his federal income taxes. To survive economically, the farmer must sell his wheat for enough money to pay all of those costs and still have enough profit left over to feed his family and prepare for next year's crops. Now, for illustration purposes, let's assume that the farmer has calculated he needs a net of $50,000 a year after federal taxes to feed his family. Because of the federal income payroll tax system, he needs to earn not $50,000, but approximately $65,000 in profit. On a gross profit of $65,000, the farmer must pay 15.3% for federal payroll taxes, or $9,945, federal income taxes of $3,500, and that leaves a net take-home pay of $51,555. If his costs are $500,000, the farmer needs to sell his wheat not for $550,000, but for $565,000. When the grain elevator or flour mill purchases the farmer's wheat, they don't see it on the invoice, but they're paying all the tax costs that the IRS imposes on the farmer. Now, if the farmer didn't have to pay those taxes, he could sell his wheat for less money and still make the profit he needs to stay in business. Now, the laws of basic economics apply to everyone. The grain elevators and the flour mills that purchase the wheat all have their own tax costs, which are passed on to those who buy the flour. When a bakery turns that flour into bread, the bakery's tax costs are passed on to those who buy the bread. In like manner, when a supplier sells bread to a grocery store, the supplier's tax costs are added to the cost of the bread, so by the time that loaf of bread reaches the retail consumer, the price of that loaf of bread contains the hidden tax costs of every entity that had a hand in producing that loaf of bread and getting it to the store shelves. It's very difficult to quantify the amount of hidden federal taxes in any particular item because each product or service will have different income payroll tax costs added to the selling price. However, it's estimated that by the time a product reaches the retail consumer, hidden tax costs have increased that product's price by between 15 and 25%. Therefore, not only is our total pay reduced by income tax withholding, but the items we purchase with our reduced paycheck contain more federal taxes in their prices. These additional taxes are hidden and almost impossible to calculate. Now, while many in D.C. complain that the FAIRtax is a new sales tax plan, it's time to call them out on that. We already pay a sales tax under the present income payroll tax system. For example, even though some in D.C. don't really fully understand it, workers can only live on the money they have remaining after they pay their federal income payroll taxes. Withholding reduces the net take-home pay by 15 to 50%. For example, if we make $1,000 a week but receive $800 in take-home pay, that's a 20% reduction, we make purchases from the $800 we have left, not the $1,000 that we earned. So if we purchased something for $800, then we had to earn $1,000 to net the $800. So, isn't the true cost of an $800 item actually $1,000 because that's what we had to earn in order to bring home the $800? How is that not a 20% tax on our consumption? And as you make more money, the amount of federal sales tax you pay increases. Now, clearly, some politicians in D.C. just don't understand economics. They continue to proclaim that they're going to make rich corporations pay their fair share so you as an individual won't have to. The rest of us clearly understand, though, that when corporations have to pay more in taxes, the money to pay those taxes doesn't come from the company's bottom line. It comes out of the pockets of those of us who have to pay higher prices for that corporation's product or service. Now, here's an easy explanation that even a member of Congress can understand. Corporations have certain legal characteristics different from an individual doing the same business, but all must follow the same rules of economics. Now, more and more retail purchases are being made by fewer and fewer retailers. Over 90% of the country's retail sales now are done by less than 10% of the retailers. Think Amazon, Walmart, and Target. Now, corporations, both large and small, have shareholders. Because shareholders want the corporations to be profitable and provide them a return on their investment, all corporations must sell their products and services for enough to cover their costs and to make a profit, or they'll just simply go out of business. They must include any federal income payroll taxes they pay in calculating the ultimate price paid by the consumer. Now, if someone in D.C. raises taxes on a corporation, then that corporation must pay the increased costs from one or more of these three sources. 1, they increase the price to the consumer. 2, they reduce their labor costs by hiring fewer employees and or spending less on wages, salaries, and benefits. Or 3, they pay from their profits, thus reducing the stock value to their shareholders. In all three cases, though, it's people, not the corporation itself, that pays the taxes. In conclusion, there are many economic reasons for moving from the income payroll tax system to a consumption tax like the FAIRtax. You can go to fairtax.org to see the economic studies there, or just start looking at past chairman's reports and looking at the advantages outlined there. However, perhaps the main reason for adopting the FAIRtax is that it shows the true cost of government on every retail receipt. It's time that our rulers in D.C. are honest with us about what their mismanagement is actually costing us. Now, we're adults. We deserve to know just how bad the cancer is so we can face it and fix it before it's too late. If your member of Congress refuses to support the FAIRtax because of some perceived flaw or shortcoming, remind them that legislation can be amended. Don't let them get away with condemning the entire bill because it has a flaw that can be easily addressed. And don't think for a minute that there aren't any flaws in the income tax. As Martin Luther King Jr. said, in the end, we will remember not the words of our enemies, but the silence of our friends. Please stand with us and demand that your representatives support a much fairer, much simpler, and much more efficient way to fund the government, the FAIRtax. The FAIRtax doesn't pick winners and losers. Because it taxes spending, not earnings, the FAIRtax lets everyone save for their retirement tax-free. The FAIRtax collects the revenue the federal government needs to operate, but does so in a way that has the least adverse impact on our individual freedom and the least adverse impact on our economic prosperity. With the FAIRtax, there are no tax returns to file and no records to keep. We pay our federal taxes when we make retail purchases of new goods and services, and with a FAIRtax, there's no need for the IRS. If you sell a used couch or a used jet ski online, there's no FAIRtax due on that transaction. The FAIRtax will allow us to take back control. The income payroll tax system is broken. It's no longer working. We can't repair it, but we can replace it with the FAIRtax. Join us and take back control of our country and our lives, not with bullets, but with the elimination of one of the biggest threats to our liberty and economic prosperity, the income payroll tax. Is it hopeless? When confronted with a seemingly impossible problem, remember the statement attributed to the author George Bernard Shaw, who wrote, "You see things and you say, 'Why?' But I dream things that never were, and I say, 'Why not?' Isn't it time for us to start asking, why not?" Help us bring about real tax reform and stop future IRS abuses. By contributing or investing $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to fairtax.org and invest in AFFT. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org.